Today's the 11th of April. Guys, how is everyone? Everyone good? Sound check, quick sound check.
Yeah, good. Thanks. Good. Good. Yep.
Fantastic. Just to go through the disclaimer quickly, any advice or information given in the room is educational nature and general advice only and does not take into account your personal financial circumstances. By viewing any of the material or any of the information presented by Bavarious Capital, you agree that this is general educational material and you will not hold any person or any entity responsible for loss, damages resulting from the content or general advice provided here by Bavarious Capital, its employees, directors, or fellow members. Spot currency trading does have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest into the spot forex market. Do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell spot FX. All other financial products or representations being made in any account is likely to achieve profits or similar to those discussed in any sessions. And this is crucial. Past performance, any trading system or methodology is not necessarily an indication of future results. And this information is purely for educational uses only. Right, guys. Now, to get the ball rolling today, obviously we've got a massive news day today. I'm sure you guys have seen. Now, what I would say, yesterday, the markets were very, I don't know how to explain it, but manipulated is the best way that I would put it. Afternoon session was, there was some unexpected moves. The euros had a massive push up. Just looking at it briefly before we get it going, you can see this. If you look at the euro here, it's had a massive move up off the back of that non-farm payrolls. So you can see that it's clearly got institutional buying power behind it, the way it's continuously going up. Now, obviously, you've got coming back to the fundamentals. I know fundamentals is one thing a lot of you guys need to take into account with a high degree of certainty, because it gives you an idea if the market's trending or range bound. Now, at the moment, you can clearly see, guys, that the market's getting driven by fundamentals. We had the non-farm payrolls, which clearly instigated initial bit of purchasing power from institutions, and now you've got a bit of a follow through. Now, in regards to what happens moving forward, we've obviously had the ECB speech today. Okay, now that really, if you look at it, hasn't really done great much to it. It looks a little bit choppy. It looks like it doesn't look like it's got any pull up, if that makes sense, guys. It looks like it's going to follow through. Now, what you guys need to be aware of is levels where the institutions are going to push it through, and all retailers are going to start to jump on. Now, you can see it's quite a range bound market. That's quite a big move, guys. Can you see that? It's quite a big push up. Yeah. Now, this is the stuff that you guys, the markets don't always move like this. The moves that have been on the table for the last few days have been quite good. Guys that are sitting in the markets, this is straightforward trading. This is ABC. It's buy at the low, sell at the high. And this, to catch this type of move when the market's moving fundamentally like this, you could use the DC cross. But if you're using buy zones on the pullback, you generally will get in. Now, you guys need to have an overall view of fundamentals. Yeah. Now, coming back to the economical calendar, because that's what you guys should be going through considerably. We've also got, today is massive. ECB's happened. You've got oil inventories, CPI, and you've got FOMC minutes. Yeah. Now, if you ask me, I don't know. I thought Draghi would give some let up on the euro, but he clearly hasn't. Yeah. You got to look, for example, a lot of people are trying to trade correlation. I've had a few clients tell me that, for example, pound CAD's not moving the same as pound dollar, or they're trying to. At the moment, correlation is slightly out. Yeah, euro's not following the pound as strong, and especially when you're trading things like euro yen and pound yen, be wary, because they do follow the euro and the pound, but also they have an interaction to what dollar yen is doing as well. So at the moment, dollar yen is driving the market. A weak yen is clearly there as well on the table, just making you guys fundamentally aware. Yeah. Have any of you guys got any questions about these events, like Mario Draghi speaking? Are you getting confident with it? CPI, like, it's coming out 12:30, not long now, 15 minutes. If you ask me, remember what we were talking about, guys. If it comes out unexpected, so if it comes out 2.8 or like anything lower, you'll probably get a bigger move. Otherwise, you'll probably see a small move on the screen. Last week, non-farm payrolls, remember what I was teaching you guys. Look where there could be buy and sell orders where the price could get pushed into. Yeah, you get good entries like sell orders here. You can see the market is rallying away. 15-minute time frame is big moves to the upside. The only thing I would say is where you're selling here, you've got to be very careful because it's clearly getting driven by fundamentals. This is textbook trading. London Open, look, this is textbook stuff, guys. You guys should be making good growth on your account at the moment. In these type of market conditions, they move quite well. Yeah. Now, looking at the news, just let me finish off the news. So we've got tomorrow, we've got Carney speaking as well. Yeah, he probably will move the markets a little bit. Possibility of a rate hike, and also on Friday you've got another ECB speech as well. Policy meetings. This is not. It is a high important event, but it generally, it's hard to say if it's going to have a big move. You might get a little bit of volatility pushing up and down, but it's a big news week. That's why you're probably not going to see much of a big break off the US session this afternoon, unless it's a bit of manipulation. Now, yesterday, I just want to talk about yesterday because it's crucial. I'm sure you guys were trading. The market was like, it's like the market was just continuously going up. Yeah. Now, this type of condition, what it is, it makes you aware as a trader. This is a type of condition that you guys need to be aware of. It's a variant, the way the market moves. Yeah. It's clearly looking for orders. Can you see this, guys? The market's clearly just pushing up, looking for orders. You can put it down to the fundamentals, but that's how the market is being driven at the moment. Yeah. Just be aware of that because, at the moment, mean reversion is not holding up as well because obviously some of the levels on the high are getting invalidated. But also where fundamentally it moves, if any news comes out like oil inventories or anything and pushes the price down into key levels, it's probably going to give you good buying opportunities. Yeah, this is the situation where you need to be aware of what the market's doing because sometimes you have to wait for the market to give you the opportunity to get in. So clearly at the moment, it's clearly rallying up. I want to be buying this, but you can't buy at the high. You've got to wait for the price to come down. Now, this is the type of stuff I want to start to get you guys to coach because it's like sometimes you've got to wait for your opportunity, if that makes sense. So you might not get an opportunity and it might run away. That means that you weren't triggered, if that makes sense. Now, catching this on the high, if you look at it when you zoom out, yeah, sorry, the London Opens are there. It looks strong. Look at the move. That move is institutional power. There's no way it's moving that much up. Now, if you're looking at it, guys, I'm going to be transparent with you. They're probably going to be looking to push it above these levels here because it's going to indicate to all the retail money is going to start jumping on here because they're going to think it's going to start to break. Yeah, so I wouldn't start to take triggers on the sell on big sells here. If you're trying to sell here and catch a trend, stay small volume. Look, the real levels are up here. That's where previous untested supply levels will come back in. This is where the institutions are going to try and push it through. Now, it's going to have an option when it gets it. With this much power and force where it's not pulling back, it's got a probability of going through because there's clearly orders that have been picked up down here. Make sense? Now, this is what you guys need to be made aware of. The guys that want to catch trades, when I hear guys say, I want to win, I have to win, this is the stuff you need to be made aware of. Look, I don't know, like, the thing about London Open is a lot of guys, they start to trade it, and then when they have a few losing days, they stop trading it. Look how clean these London Opens are this week. Today's one was very clean. I know a few of you guys are trading it, yeah, but I'm not seeing enough guys continue the orders with London Open. You need to stay with the process. You need to continue putting the orders in. If you fall in love with a result, either a big win or a big loss, you're getting emotionally involved. Yeah, London Open works. It's the most high probable strategy as a breakout strategy. It's the best way to breed discipline into your trading. Yeah, a lot of guys, what I find is they start to trade, they start to follow the strategies. It gives them a full sense of security. Either they win or they lose, and then they stop following the process. If sometimes what happens is you pick and choose the days that you trade, and then the P&L doesn't look as colorful after 30 days or 60 days. You need to follow the process. If you follow the process consistently for 60 to 90 days and you can't see the results, then you can say there's something wrong with the strategy. But until you continuously go through the process. I'm not seeing enough trading off the London Open, yeah? Now, coming back off London Open as well, supply and demand is the only other thing that we're really getting you guys to go through. Supply and demand is crucial. It's understanding where the order flow is, yeah? Now, one or two things that I'm finding with the supply and demand trades is that guys, A, are taking the entries from the high of the boxes. I know this is a little bit contradictory between myself and Paul. I prefer the entries a little bit lower just to get that little bit of better risk reward, guys. Yeah. Now, on top of that, when you're managing these trades, stops to break even and leave it. Now, what you're looking to do is build up multiple trades where the positions are at break even. You have to allow the market to breathe for it to, or in order for it to move in your favor. If you don't allow positions to breathe, the market's never going to move in your favor. But with these fundamental moves, in these market conditions, it's easy to make money because the market's moving one way. Now, if you saw the markets about 6 weeks ago, it was mean reversion was holding up a lot better. Now, this is what you guys need to start to understand, start to take into account, especially when it comes into regards when you want to turn volume consistently. Yeah, but you can see how they work. Now, coming back to my point about dollar yen, where sometimes when guys are trading like euro yen, it moves up, but it comes back down. Yeah, this is where you have to use dollar yen as a guide as well, because if it's moving from the yen, like where euro and pound are continuing to go up, some guys are selling euro yen and pound CAD and things like that and getting a little bit caught offside. The correlation is a little bit out, so don't think that it's set, especially when you're taking into account. If you use dollar yen to give you a little bit more confirmation on the direction, it helps, because obviously you know if the dollar's strong, dollar yen's going to be going up and vice versa, guys. Yeah. Now, have you guys got any questions? I know there's only a few guys in the room. Have you got any questions? Do you not understand the fundamentals? What I mean by it's moving by fundamentally at the moment? Can I get a bit of feedback, guys?
Yeah, I mean, I'll give you some feedback in terms of your supply and demand trades. I feel more comfortable putting a buy or sell limit or stop internal to the box as opposed to above the box, because just particularly the market moves at the moment seems to be pushing through quite a lot.
Yes, it's pushing
whereas if you do it above the box, sometimes it bounces. Yeah.
Yeah, if you do it, just to put that, like, the reason why they're getting invalidated is because of the fundamentals. Does that make sense? So if the more and more that the market's being driven by fundamentals, it's just something to be aware of, because it does invalidate. Because don't forget, the rule is sell high, buy low. If that makes sense. So, but if it doesn't give you the opportunity, the thing that I want to get you guys used to with the supply and demand, yeah, on a 15-minute time frame, what you'll start to see is that you'll put orders at the high and the low. Now, most days they won't get triggered, but the days where there's big news or there's big movement, that the entries work quite well. Now, breaking it down, going into yesterday, because just going into a bit more closer play, yeah, yesterday the market worked very choppy. Like, can you see this? This is typical trading. Like, some guys did a hell of a lot of volume yesterday. I know there was one client that absolutely ate the euro up. He was buying and selling through this multiply from just supply and demand zones, but where the price comes down here and here, it's very easy to use it as a day trader to buy and sell. And this, obviously, there's different ways to turn volume. Yeah, when you turn volume with London Open supply and demand, it creates discipline. Yeah, it allows you to grow the account. Now, once you get consistent at growing the account, you want to turn volume off the price, understanding what it's going. When it trades like this fundamentally, it's easy trading. It's just buying on the lows and selling on the highs. But you have to be cautious on the highs because they get invalidated quite a lot. Yeah, but London Open, if you're looking are you guys at the moment, yeah, just to go through London Open, I know it's a little bit off topic, but that's the main strategy that I want everybody using. Yeah, range, overnight range, guys. Yeah. Orders above and below. Remember the first rule, 15-minute, 5-day time frame. Yeah, this is in order for you to put your trailing stops. Now here you are at the high of the market, guys. So this is where you would be putting the trailing stop on the sell bigger than the buy. But if you have a look at it, this is why you take both orders, because the move should be violent enough. Yeah, some guys are a little bit more confident. They trade with 3 pips like this in the fundamental says. You can see the market's moving. You would have taken an entry now, stop to break, and you'll be holding a position through this news time where it can be pushed in your favor and your stop's going to be at break even. This is the type of things I want you guys to start utilizing. This is how you're going to put yourself, this is giving yourself an extra edge in the market, if that makes sense.
Just hang on a sec, because I mean we discussed this. So there's There's position over a longer time frame, is it above or below
Yeah.
in terms of possible mean reversion, but also there was short-term and long-term trends.
Yeah.
So there was a differential between pairs like GBPs, 5 pips or whatever. But if it's a counter-cyclical, it's 1.5 or sorry, counter-trend, not counter-cyclical.
Exactly, 1.5.
But
correct.
I mean,
correct. But like, if you look at that would at least maybe even if it hadn't taken you out the move, can you see where the fill there would have at least taken you out at break even, Stephen? Do you understand?
Yeah, well, I was trading GBP this morning, GBP dollar, and I wish I pushed the stop at 3.5 because I was trading counter the day before. I had
but also be wary
dollar franc and euro franc, etc. And then if I had the 1.5, I would have been stopped at B. But I mean, it just some news came out, like you said, fundamental. I'm just
but obviously at the moment, do understand it is a big news week as well. Yeah, but don't forget, London Open's there just to help you do the volume. It's not there to necessarily. It's guaranteeing you discipline, because when you're sometimes day trading away, it can get quite. You can buy and sell quite a lot unless you've got clear understandings to trade your way out. Sometimes it can get quite choppy, guys. Make sense? Yeah. If you have a look, you wouldn't have got triggered on the sell today. Does that make sense? I'm just showing you guys, because sometimes, not only just for you, but for other guys as well, sometimes they have bad results, good results, they stop doing it. Just keep going through the process, because at the moment, the way it's moving, you're easily catching it. Like Monday, if you go back on the 5-day range, you can have a look. Look, there's supply and demand. This is crucial. This is quite clean. Wouldn't you agree? Yeah?
Yeah, I think what I'm doing is I'm actually agreeing with you in terms of the pip spacing for the stops.
Yeah,
I'm just agreeing with you because just what I'm seeing counter trend.
Obviously, you can tweak certain things. Some people take it and tweak it. Some people continue it. This is the most effective way, obviously, especially for new students. The main thing when you guys are new to the market, it's more about psychology. It's more about keeping you in the game so you can see the results. Once you've seen the results, it's a rinse and repeat mechanism. You can continuously rinse and repeat. Does that make sense? So just be wary. In regards to London Open, do try and trade the 5 majors. Yeah, I know Euro, Pound, Dollar, Swiss, and Dollar Yen are the favoured ones because they're a bit tighter ranges. But Euro and Cable do work well, especially when the market's moving fundamentally. This is probably in the last 6 to 12 weeks, probably the best fundamental movements that we've had. The market's quite moving quite well, if that makes sense. Yeah. Now, I want to come back down to supply and demand as well, because obviously when guys are trading supply and demand, I get a lot from certain guys about sometimes the market invalidates certain levels. Yeah. Now, generally, if the market is trending, you do have to only take the levels in the middle with the side where it's trending to catch the trend, if that makes sense. A little bit like how the DC cross works, where when it comes back down and goes back to go, it gives you an entry. Make sense? But you can see that systematically here. Now, the only thing I would say is when you're trading supply and demand, if the market's range bound, so if it's moving just off technical analysis, really high and low, the levels in the middle be a lot more aggressive with trade management because they're more likely to be, how should I put it, invalidated. Yeah. Now, guys always ask, why does Neil draw all these lines on the charts, these support and resistance lines? Yeah. These support and resistance lines, I treat them as a roadmap or a TomTom or a Google Maps in the markets, if that makes sense. Not only do I never use these things for entry. You never use support and resistance for entry because it's just invalidation. Yeah, you use support and resistance for exits. So sometimes when you see, for example, you take a supply and demand trade and it runs up into key levels, take profits on the table because it helps build confidence. And you'll see that these roadmaps hold up with trade management a lot better. The support and resistance is purely used for in-trade management. It's used as a roadmap, where to get in, where to get out, where to re-enter. Make sense, guys? But obviously you can see that it's trending here. When it's pulling back, it's going long. But obviously where you're coming up here, guys, be wary. You're coming towards the high. You want to start looking now for levels where there are orders. There's orders here. There's orders here. The reason why I mainly focus on euro dollar, a lot of guys on the charts, it's because it's the main one. It's the one that thing. But I know that some guys don't like euro dollar because it is quite manipulated. Yesterday's session, all this stuff here, this is very manipulated yesterday. You didn't know what was going on. This happens a lot. It doesn't happen on any of the cross pairs. It happens on euro. That's why sometimes some people like to stick with dollar Swiss, euro pound, and dollar yen. This is, for me as a day trader, this is perfect because it's giving me the opportunity from high and low, high and low. That's all you're really looking for, because a lot of people understand, how do you understand direction? Follow the first rule, high and low, even of the day-to-day range, because it will allow you to catch the movements in a fundamentally moving market, if that makes sense. Yeah. Now, just to go back through some of the news as well, because it's crucial. Yeah. We had the speech from Draghi this morning. Yeah. It didn't really. It caused this little bit of choppiness here. If you ask me, it's kind of probably aggregated the orders. Now, this is clearly getting pushed up. There's obviously CPIs coming out right now, guys, so you can see what's going on. You can see it's just really affecting in the euro and the dollar pairs, yeah. So it's obviously clearly pushed the dollar down at the moment, yeah.
It's 2.4 versus 2.4, isn't it? It's bang on, yeah.
Fantastic. So you probably won't get a big move, but that's probably a good entry on a buy. We've missed it now. You can see where it's come out. Let me bring up the calendar so it's clear. Yeah, it's 2.1 is expected. Probably a 10 or 15 pip move. Let's have a look at it. Let's just watch the chart. Best to watch it on euro dollar. You're not seeing much. Look, it's not much. Can you see that? Not much. It's coming in line. It's as expected. If anything, I'll be looking for I think it will be finding orders up here. Is this continuously keep going up? If you look at it on a daily or 4 hour, eventually it's going to have to run out of steam somewhere. It's going to have to come back to find some orders. So be aware of this, guys, because you might not get the order, but you'll get a good growth trade if you get an entry where the price comes down or pushes up into levels. Now, you can see it's not really doing much. It's a bit premature from the level. I prefer to take it a little bit higher. But let's just bring up the calendar so it's clear. So it's come in line, 2.1 previous. It's probably not going to get a big move. Now, if you ask me, 2:30, 3:30 our time, yeah, you've got oil inventories, yeah. This is a big mover. Yeah. Now, I just want to bring this up. I know none of you guys are really trading commodities and stuff like that, but it's something to be made aware of. Yeah. Oil is something that's traded by a lot of traders. Yeah. It's very unforgiving. You need to be very cautious with it because it just moves, but it moves very, very well. Yeah, if you're looking to grow accounts, this is something that is good to understand because it gives you a general direction of the dollar. Now, if you have a look at oil on a major scale, it's pushing its way up. It bottomed out. This was pure manipulation. This is Russia, and when Russia were having problems, Putin was having problems. They brought the price down, so it made it unprofitable for them to, for a lot of the Russian companies to be, because they spent too much on exploration missions. Now that the fact that the price has rebounced, I'm quite confident that you're going to be seeing push up on oil. Yeah, I think it's a buy. It's probably going to come back down to find orders before it does go up because you can see it's pushing up, but it gives you an indication of what the dollar's doing. Yeah. Now, if you ask me, I think oil inventories is coming out today. If this figure comes out obscured from this, these figures are quite different, quite obscured. It also based seasonally. Yeah. Now, in the run up after the balance sheets, generally the figures drop off on oil inventories just historically if you lot research it. Yeah. Obviously, oil's traded by a lot of retail traders. The four major pairs that are traded, or four major things that are traded by a lot of FX guys that traded FX for 5 or 10 years. Pound yen, because it moves, if you understand it. Oil, gold, and euro dollar, because it's the biggest one that they can get in and out of. Because if you've got a 5 or 10 million pound account, you can easily get out of a 1 or 2 million pound position with euro dollar, where some of the cross pairs are a little bit more manipulated. If that may, sorry, not manipulated. There's low levels of liquidity. So when you're trying to get in and out on big positions, it gets a little bit choppy. Yeah. I know it's a little bit quiet, guys. Any feedback from you guys? Good? Information good? Yeah? You're liking what you're hearing?
Yes, mate. You just talk really fast. I think people are just taking it in. Yeah.
Don't worry. That's why they're
good, Neil. It's fine.
Yeah, I know. That's one of my major pitfalls. A lot of guys do tell me that the information is just delivered a bit fast. I do apologize for that. I'll try and slow that down. Keep that in the back of my mind while I'm giving you the info. So in regards to news now, we've got oil inventories and we've got FOMC minutes tonight. Yeah. Now, FOMC minutes at the moment, in regards to the US interest rate and what they're looking to do and stuff like that, I think Trump is a more crucial factor. That's why these type of events at the moment really won't move unless they come out and they give a possibility of an early rate hike or reducing a rate hike. And that, no one's got a crystal ball about. You just have to wait and see. US sessions, where there's heavy news like this today, the market's going to be a little bit tight until the news comes out. So if it does give you an opportunity to get in, get your stops up, see if the news is going to push it more in your favor. But I don't want to see guys gambling and holding positions through news. If you're holding positions through news, it's better to cut it, because on a small account, it's irrelevant. When you're trading 5k or 10k, it's irrelevant because it can be the difference between 100 or 200 pounds. But when you're trading six-figure funds or quarter million pound accounts, investor funds, or once you can show that you can do it, it can be the difference between a 5,000 or 25,000 pound loss. Now, on those type of scale, something that I will go through again, and this is one thing I want to just reiterate with you guys now. I'm seeing a lot of execution error on the London Open. I'm seeing a lot of guys send me P&Ls, and there's a little bit of execution error. Not necessarily because you don't know what you're doing. It's just pay clean precision to the orders and where you're putting your stop losses. If I was you guys, I would double check, go through every single thing, because sometimes what happens is a trailing stop in the wrong place or the wrong thing can be the difference between you catching a big move or losing a big move. And that is crucial, because that is a retail thing. You need to make sure that you made the decision and you did it effectively, because when you win, then it makes it easier to repeat the process. Some guys, when you start trading, you have big wins, but because you don't know what you're doing and it's giving you a false sense of security, it's harder for you to repeat the process. That's why I don't want you guys to gamble through the news and let the market be pushed in your favor. I want you guys to concentrate on entries. Yeah. Now, coming back through the rules, because I know there's a few new guys in here as well. The first rule is sell high, buy low. Now, at the moment, all assets, even the dollar where it's coming back down here, look, that's in a key zone. It's giving me an entry there. I like the look of it. I don't want to risk too much. Obviously, there is news. It's come out as expected as it is. Now, when you get into these type of trades, you need to allow the market time to breathe, guys. Yeah, that is a little bit of a premature entry, obviously because of the fill. I'm happy to give it a little bit of space to breathe. Initially, I'm going to put a 3-pip trading stop on it. Soon as I see that getting back up there, I'm looking to cancel it. If it takes me out, it takes me out. Might take a re-entry towards the bottom, but don't over trade in these levels, guys. Sometimes what happens, but if you're looking at it on a 15-minute, it's still in the middle of the range as well. So I wouldn't fall in love with this supply zone. I'll be falling in love with this one, or this one, or this, or these high ones, if that makes sense. Yeah, this is what I'm trying to get you guys to understand, because it helps you catch the bigger moves. These ranges are like 100, 200 pips. It's easier for you to catch. Now, some of you guys have been trading with us for quite a while. I like the sound of hearing what. Thanks, Patrick. So I just want you guys to be aware of it, because it makes it a lot easier. Yeah. Now, in regards to euro dollar, I know a lot of you guys hate it, but it's very easy to day trade. It respects the supply and demand levels clearly. But forget about the ones near the high, guys, because obviously when you're buying near the high up here, your risk reward's awful. And really what you're doing is you're adding to the retail money. You're helping just push the price above. Yeah. Now, I do expect this market to come back down somewhat. Do you know why? Because it has to come back to find orders. The market's order driven. There has to be bigger orders to push it above the high. It's not going to if it just flies through, it's probably going to be some unexpected news that came out, guys. Yeah. Now, this is teaching you guys about order flow. This is the stuff that you guys really want to know about, because if you can start to trust the levels, you won't see the results in the levels till you start trusting them. But you have to allow the trade time to breathe in order for you to start trusting it, because otherwise you're not going to just trust the level. But you can see the levels do generally hold up or allow you to get out and beat the break. Like if you've got a reasonable account, 10, 20k, you can comfortably do like 30, 50 to 100 lots a day. If you guys can see, like I've done this for years, and it's quite easy once you get into a second nature of it. But the thing that you guys need to get out of is the emotional side of it. Don't be stressed. Don't look at this as thing. If you guys feel stressed when you're trading or something like that, it could be an element that your account size is a little bit too big, or you're not confident in the process. Yeah, the confidence comes with practice, guys. I know some guys think that they're just going to look at the market and just pick it up straight away. 3 to 6 months is enough time to take a graduate from a red brick university and put him through the program and get him to turn a lot of volume. That's how long ideally, but obviously guys that work and stuff like that, it could take a little bit longer, it could take a little bit less. But don't forget, the training is here for you guys to take. Don't ever feel shy. It doesn't matter how small, how big. Like always, I'll point you guys back towards stuff. But the reason why I'm playing on fundamentals so hard is because it's so crucial, especially when levels start to get invalidated. This is how you become an expert of the market. Once you start understanding the fundamentals, understanding how the market's moving, you've seen a few events, how it works, how it doesn't work, it starts to build conviction. Now, when the conviction kicks in, it's very easy for you guys to become confident in it. And that's where a lot of students, what happens is you go through the process, you learn a lot of the theory, but you give up, like the story, like 2 foot from gold, where you've nearly hit it, but you stop because you stop doing the process, because you've got fallen in love with the result, either whether it be a winner or a loser, but generally a loser. There's a few things that I've heard time and time again. A professional trader doesn't stop trading when he goes broke. Yeah, or when he loses an account. A pro trader will continue through, because if you're really that confident in your ability, you know you'll get the money back from the market. But also, sometimes you'll find that where you put orders in and they just lose, sometimes you'll put orders in and you can't not win. It's just everything keeps coming through. And the problem is with trading is you can't differentiate where the losers and winners are going to be. Because if you could, I'll be multi-million, and that's the difference between it, guys. But you got to be affordable, you got to be comfortable with what you're trading. If you're not comfortable with the amount that you're trading, you're going to make emotional decisions. You're going to be like, oh, if that trade came through, I would have won this much, I would have won that much. That type of mindset, or those type of theories, are pure retail mindset. If you're thinking like that, you're eventually going to burn out, because you're either going to fall in love with winning or losing, or give yourself a full sense of security. Just stick with the process, guys. Yeah. Now, the supply and demand levels, which are a little bit further away, which you don't always get triggered, give better entries and hold up. When you're bringing your stops to break even, I want you guys to start building up positions where your stops are at break and they're moving over a few sessions. The market has to take a few sessions for it really to move in your favor. See this trade here? You have to allow it. You can see this entry here, to me, looks kind of safe. If the euro comes down, according to what happens off FOMC later, it's either going to be pushed up or it's going to come down. But I believe that euro manipulation, where the prices turn now on the euro, looks like it's going to have to come down eventually. One thing, 3 aspects of trading: always try and trade into the open spaces, because you get better risk reward, if that makes sense. And it works off the first rule: sell high, buy low. The rules, to go through them, because it's crucial, and I see, I still see guys buying at the high and sending me P&Ls and thinking I can't notice it or don't notice. If I start to see guys selling at the high and buying at the low, I'm going to see it as a clear disrespect of the rules. You're not following the rules. Sell high, buy low. Only when it's fundamentally driven, which is 20 to 25% of the time, be wary of selling on the high. But that is still always the crucial rule, because institutions do it. That's why you do it. When you buy wholesale to buying retail, if you're buying wholesale, you're not going to buy at an expensive price. You just won't do it. You're not going to buy a mass amount of something at expensive. That's what the institutions do. When the institutions make their decisions, they make it off the back of economical data, where the orders are. But the institutions don't rush for a position. The institutions just won't push the price through. They'll wait and get it at the best price. If their order gets filled, happy days, they move the market. If not, guess what? They'll wait for the opportunity. The retailer can never move the market. That's why someone like George Soros is so influential. That guy is self-made. He built up millions and billions of pounds from retail accounts to eventually own massive amounts of accounts where he can move the market. Now, George Soros is famous for breaking the Bank of England in 89, where the interest rate, they were trying to hold it up by printing more sterling, and he had so much capital behind him back then, he broke the Bank of England for £1 billion. Now, in turn, a lot of you guys need to understand the market's zero sum. If a lot of the liquidity comes from the bank, guess what? When you're winning, you're hitting the banks, if that makes sense, because that's where a lot of the liquidity comes from. And that's something that you guys should be aware of, because When you've got smaller accounts, it's a little bit different. But as you start to get larger and bigger accounts, you need to understand where the institutions are buying and selling, because you build positions. You won't just take an outright, if that makes sense. Obviously, there's hedging strategies as well. A lot of guys are asking about it, but I'm only giving hedging strategies to guys that are disciplined. If you're not disciplined, forget about it, because you're not going to execute it, if that makes sense. Yeah? So now, looking at it, have you guys got any questions? Is there anything that you guys want me to go through? I know quite a few guys come in and go because of lunch breaks and stuff like that. Have you guys got any questions? Any queries? No? Good. All right, let's continue. So looking at it today, just to give you lot a little bit more of a rundown, market's flat. It's not really big range. That's why the news is there. You're going to get a bit of more direction, I think, once FOMC happens. You've got and oil inventories, so be aware of that if you guys are holding positions. Now, I'm looking at it, pound yen and euro yen. Some clients are getting stung on it, thinking that euro dollar and cable are going up. Be wary, yeah, it's following the dollar yen, the yen at the moment, to give you a bit more direction. So do use that for you guys that are doing a bit of correlation trading. Yeah, watch oil inventories today. I think that will be very good. I think it will move the market. It could probably give a little bit more direction to it. You know, if oil's come down, guess what, guys? A strong dollar and vice versa. And do look for the orders as well, because it does. Oil inventories does move the market. It's one of the economical events that you will see a move across the board, if that makes sense. Yeah. Now we've got a little bit of time left, so I just want to go through supply and demand. Yeah, you can see that this has come. Do you remember when I was talking to you guys about entries where when it's moving one way? This is giving you a good opportunity to buy here, I think. In my opinion, if this level holds up, I think it's clear space up here, and it goes with the fundamentals. Now, if this invalidates, it gives me a good idea about what the yen's doing. Now, if the yen's weak and dollar strong, you still got to take into account what the euro is doing, because the euro doesn't really care what the yen's going to do. Yeah, so be aware of that, because that's one of the biggest pitfalls in the correlation trading, because a lot of guys trade with correlation, like they understand euro dollars going up, pounds going up. That used to be highly correlated. Nowadays, because of Brexit, the correlation is a little bit out. It's a little bit like different market conditions. Just be aware of your market conditions. Yeah. Now, the thing I want to go through, you guys, I think a lot of you guys need to start doing now is reading. They say it takes 10,000 hours to become a master of any type of habit or access. Reading fastens the process. Yeah, there's a few books that we're going to get out to you guys. I think I'm going to get out the Chimp Paradox. We're going to get out Market Wizards, and I know Paul's already got one out for you guys. This is just extra reading activity. It puts you in the mindset of a trader. It starts to get you thinking like a trader and speculating like a trader. These things are must read. It will help you build your understanding from an amateur to pushing you towards more of a professional understanding and mindset. Yeah. Once we've gone through a lot of the theory and we go through a lot more sessions and trading, it's just about working on psychology with you guys and keeping you guys in the game. Because as soon as you guys start to see the results, it's a rinse and repeat process. Yeah. Now, I think we're going to wrap it up for today, just because I think quite a few guys are popping out of the room and stuff like that. It's a little bit flat. There's news going on as well, and I've got a coaching call at 2 o'clock with a new client. So is there any questions, any queries, anything you guys want me to think? Everything okay from you guys? Good? Yeah?
Oh, good, thanks.
Fantastic. Happy trading, guys. I would say that do concentrate on growing the accounts a little bit more as well. Look at the growth side of it. Do start to go through the London Open as well. I'm seeing a lot of people miss London Open. Pay close attention to the orders, stop losses, trailing stops. If you think that after going through the process you need to tweak it a little bit, don't feel as though it's a crystal ball. And if also, one other point is, if any guys see any contradictions or anything, questions that between what I say or what Paul says or anything that they hear, don't be a stranger. Give us a call. We'll go through it. I'll give you the understanding. I'm quite transparent with it, and I like to make you guys understand about it. Yeah. So that's it for today, guys. We're wrapping it up. Happy trading. Be aware oil inventories, FOMC minutes, and stay in touch. And we'll pick it up with you guys soon.